In this video, we're going to talk about what setups and conditions should you be increasing your position size on. This is on the theme of critical analysis of your trading performance. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this kind of theme of critical analysis of your trading performance, I believe this is a really easy, relatively easy, takes a bit of time, but a good way of getting a better result, getting better results, should I say, of your trading over the next month, over the next year, whatever it may be. Analyzing your existing performance and making adjustments based on that data that will help you moving on. This isn't about finding a new strategy, isn't about finding a new trade. It's about adjusting your habits to give you a better bottom line moving on. Okay, so in this video, I'm talking about what setups and conditions should you be increasing your position size? In other words, where should you be taking more risk? Now, I know there's a school of thought out there, and that's fine. I don't think there's, like I've said before, if you watch me on any videos, I don't believe there's any right or wrong way to trade. All you can do is kind of share experiences and share ideas, and people will take them or leave them and develop their own path, or take a little sprinkling, like a bit of a recipe. So that's fine. So there is a bit of a thought, a school of thought out there that says, hey, you should have a fixed position size regardless of what you're trading. So whatever setup it may be, you're always fixed. And the theory behind that, of course, is you don't know where your next winner is going to come from. And that makes perfect sense to me. However, I personally, and I know others have as well, have found better success when I press the pedal, press the throttle, press the gas if you're over the pond, on the trades that have more likelihood of working, or I believe have more likelihood of working. Now, you don't just do it from gut feel. You're probably going to have a scale of strategies that go, hey, okay, that's a real A+ grade strategy. Don't get it very often. When I do, man, I want to put some coin on the table for that one, because I'm prepared to risk some, because the chance of that working are high. The risk reward ratio is high. It's ticking a lot of boxes. I need to go put my chips in on this one. And that's what we're kind of looking for here, is how do you know what setups that you should be putting more onto the table? What more should you be taking more risk on specific setups, or which ones should you be taking more risk on? Okay, so what you need to do with this is, again, analyze all your data. So you get all your previous trades, you get your statements, and you kind of start to look through. And this is a little bit more complicated than your top winners and your top losers. There's a little bit more legwork involved in this, but you can start from a kind of gut position here. As a trader, it's a good place to start from anyway. You say to yourself, hey, I like the first pullback trade. I like trading the double top trade. I like trading whatever it may be. And so you can then start to go back in your trading journal, look at those specific setups and see how profitable those setups are for you. Now, this is the assumption, guys, that you have a trading journal. You're noting down the kind of strategy you're going for. If you don't have a trading journal, I would definitely recommend moving forward that at least you have something that is helping you get data from it. So yes, this is a first pullback trade. It's a double top trade. This is a kind of trend line break trade, support trade, whatever it may be. Just tag it down so you can categorize the trades. Even if that's the only thing you do. Obviously, the more information, the better. But if that's the only thing you do, at least then you can see what's going on. If you haven't done that, you might have a little bit of legwork to it. You're going to have to go through all your trades, and you're going to have to see exactly what the setup was by looking on the chart, where it was and what it did, etc., etc. But assuming you've got this data already, you can then look through and say to yourself, hey, well, actually, do you know what? Whenever I take a double top trade, that seems to be working well. And actually, when I look down and I get all the data out, so I print off all the information related to that trade, so the time, the economic data on the day, the price action the day before, all that kind of stuff, the time of, all the stuff that's interesting to you, you can say, you know what, actually, on Tuesdays, okay, I'm just picking something out. On Tuesdays, when I take a double top after we've moved kind of 1 ATR on the day, again, I'm really just being an example here, that's a very profitable trade for me, because I've won 9 out of 10 of those over the past month. I haven't taken any heat on them, not much heat, when you can see on the chart, and in fact I'm out quite early and I'm still hitting my targets. So okay, What's the other theme with that? Maybe the theme is that on the Monday, there's a bit of a trend day. So you're trading the day after a trend day. You're trading, this is day 2, that's day 1, there's your trend day. You're trading the day after a trend day. You get a move that's about the ATR on the day. You're trading that second test of maybe a resistance or whatever it may be. You have to get into finite details about it. But the point is, you're now generating something that you can say, this is quite interesting. So, 1 is my trend day prior. 2 is my double top trade. And 3, obviously, your ATR or whatever you may be doing. And again, I'm just using an example here, but this is kind of a real example almost. Hey, that's a really good strategy for me. That's worked very well for me as well. Proof's in the pudding, the proof's in the statement there. I'm not theorizing that it's going to work. I've seen it, I've actually executed it. I've been good enough to actually put money on the table for it. Okay, I'm going to allocate more funds to that. So moving on to adjusting my trading plan for the next week, the next month. This group of trades, if I get that, I'm going to double my size, or I'm going to triple my size, or I'm going to whatever it may, or maybe add a half to my size. It doesn't have to be, the numbers obviously got to be suitable for you. I wouldn't recommend going 10 times the size, because you're going to activate a kind of different problem there of trading a size that is perhaps going to trigger emotions that you don't want. You're obviously very comfortable with doing that because you've seen some performance, some good results from that. So maybe adding more size, just enough so you're still comfortable, and you can work on that and build on that if so. And then you do that again, you look for the next strategy that's working for you, the next strategy that's working for you, but asking yourself that question, which setup and which condition? And now, okay, I've kind of blended the setups and conditions into one here. I said to you, okay, the setup is the double top, but the condition, which is this part of it, is that the prior day was a trend day. So the conditions of the market are, hey, it's the day after a trend day, and we get the double top, and we've moved an average true range in the day, whatever setting you've got it on, or half the trade, or whatever it may be. So I've kind of added those all together, because very rarely I think that setups just work on their own. So this is a perfect way of blending the two together and say, okay, market conditions are, hey, we're in a really explosive, trending, volatile environment, and I'm buying pullbacks. That's when I'm killing it. I need to dial up my size on those. Or, hey, when we're in, after news or earnings on stocks, and I fade the first gap, I'm really good at it, I need to put more money into that. Or, hey, when I see dollar doing this and I'm trading the yen based on that, then I'm really seem to have really good performance. And again, using it on actual data, so you're not theorizing and guessing, then I'm really good at it. I need to push more money into the table. Because at the end of the day, guys, we are just literally want to make more money as traders, right? We want to make more money, as least risk as possible. We want to reduce the risk and increase the return, and that's it. And it's not as simple as obviously risk reward ratio for each trade, but doing this kind of thing and finding out what you're good at, where you potentially can make more money by doing the same thing, but just increasing the risk and hence increasing the reward potentially, will improve your bottom line if you get it right. Is it going to work for you? Who knows? But you can see, I know it's worked for me, I know it's worked for others. It's a worthwhile investment in time. You might look at it, you might say, you know what, actually, I haven't spotted anything that's really exciting me. And that's fine, at least you've done it. But you might look at it and you might see the biggest opportunities just sitting there for you. And you might even say, you know what, in actual fact, what's the point in trading anything else but this absolute dream team, A+, A grade, top of the tree strategy? If I trade that and I trade that in size, I'm going to be much more comfortable. I'm going to have a better bottom line. Hopefully at the end of the day, I'm going to become more of a specialist in this. There's loads of ways of looking at it. Anyway, you get the point, guys. If you like the videos, give it a thumbs up. Or if you like this specific video, give it a thumbs up. If you like the videos in general, then consider subscribing if you haven't already. Otherwise, take care and keep the risk managed, and I shall see you in the next one. Bye-bye.